Hey everyone, this is Rob Roy and welcome to the Elliott U.S. Market Update. Taking a look at the market, you can see something interesting on Friday. We did open lower even though we closed up near the high of the day, and that was due to the fact that the Trump administration announced some new tariffs on China. China obviously immediately said that they would retaliate and announce more tariffs on U.S. goods being imported into their country. I don't think anybody really thinks that the U.S., the Trump administration, etc., wants to enact these tariffs, that it's more of a bargaining tool, a negotiating ploy, if you will. But we'll see how it is. The market is playing it just a bit on the cautious side. However, I believe if the market really thought that we were going to have tariffs that were going to expand and grow globally, the market would have had a much bigger down day. So just opening lower and trading back to the upside, I think, is explanation that nobody expects this to really be something that is enacted and lasts for any sort of a time period. Let's put the Elliott Wave on the chart. As you know, that's what we follow, and we are still dealing with the breakout from this rather large triangle. And I wonder if any of you have taken the time to go through and try to plot about where the market breakout should be. And if you take a look at the mouth of the triangle, again, remember this is one of the Elliott Wave corrective patterns, and this is what we've introduced to those of you that are used to just the 5-wave directional patterns. The fact that we have the 3 corrective patterns, flat, zigzags, and triangles, and Elliott's focused himself on those. The breakout and using the rules from the triangle would give us a target on the S&P of right about 2,900, and again, this is the SPX, the cash index. Now, it doesn't say when we're going to get there. We could have some back and filling. We could even have another move down and a correction with this A wave, as we've talked about. We don't know where that actually could lead or how long the wave, the A wave, will be in place. If we look at the Elliott retracement, you'll be able to see that clearly we haven't reached a 38.2% correction on Friday's move, so that doesn't count as any sort of a correction for a potential move to the upside. I also want to take a look and see if I take the Elliott indicator off and look at this potential zigzag pattern starting at this low here, and we use the tools with Integrated Investor and ProfitSource for creating the zigzags within Elliott Wave. You can see we had a 38.2% correction. If we take the low of the triangle and then go ahead and put on the fib extension tool and note where this move kind of has hit a little bit of resistance right at the 61.8% extension, which is, according to Elliott, the exact point that you should reach and have some resistance on a 38.2% correction. So we'll see if the labeling of this A impulse wave shows a further move to the upside out of this, or if the 61.8% level holds. Now remember, just because we hit the 61.8% level doesn't mean that we can't reach a higher extended level. So it's going to be very interesting to see how this plays out over the next couple of weeks. But again, the labeling has been absolutely spot on with what's occurred in the markets. If we take a look at the SPY so we can bring volume into the mix, you can see that on Friday we did have higher volume, and it's not just because of the fact that there were the tariffs announced by the Trump administration on Friday. It was also an options expiration day, and typically option expiration days have higher volume. So the beginning of the week is going to be very telling to see where we go from here. Looking at the VIX to give our VIX update, we have the market basically just churning sideways, again in between this 15 and 10 level. and I don't think I need to go through and highlight this for you anymore. We've talked about it numerous times, with 15 being resistance, then support, back to resistance now, and then we have the level of 10 here acting as support, and we are somewhere in between those two, with the VIX churning in between. Personally, I like a higher VIX. I like more volatility. Most option traders do want the heightened volatility, so we will keep an eye on the VIX as we do each and every week. I also wanted to add in some commentary while we're talking about the VIX and volatility indicators, sentiment indicators, the Bulls and Bears survey that we mention quite often, the Bulls and Bears survey from Investors Intelligence, measuring whether or not investment advisors are bullish or bearish. The Bulls are getting back up to 55%. Now that's the lower end of getting to the extreme level of bullishness. When we were talking about this back in January, it got up to 65%, which was extremely bullish, and then we had the correction at the beginning of February, because again we just had such extreme bullishness that it was time for a correction. Now 55% on the Bulls doesn't necessarily mean there's a correction on the horizon, but it's getting to the point where now we want to start paying attention to it again, because when the sentiment is in the middle, it's meaningless. Sentiment indicators only matter when they're at extreme levels. So it's just, I wanted to bring it to your attention just so that it's something we could keep an eye on. The Bears are down around 17%. And then, as we talked about here earlier, and the Trump administration, the other economic news has to do with the fact the Federal Reserve did raise rates once again. So let's take a look at the dollar, and you can see that the dollar has moved higher, and with the Elliott Wave indicator, it's showing us that we are having a pullback and then a potential extension up to the 5 wave. So it has decided to go ahead and label this wave 4 correction and look for a wave 5 extension in the dollar. And I do think that we are going to go higher with the dollar as interest rates continue to go up. And we've been monitoring this for months and months. If you've been watching these recordings, back to even when the dollar hadn't reacted yet to the rate increases, the improving economy in the U.S. Now, one thing that has been interesting in the world of the Federal Reserve is the fact that even though they are embarking on a rate hike campaign and they raise rates this week, here's the TNX, the 10-year that we've looked at. There's our Elliott Wave pattern, and we've highlighted this several times in these recent recordings, with the fact that it does look like interest rates want to move back to the upside. We do feel like there's that eventual target on that big zigzag at 32. And again, just go back and look at previous recordings if you want to see the particulars and the technicals along those lines. But the Federal Reserve has said that they may not raise rates as fast as some have been expecting in the marketplace. But then the Atlanta Federal Reserve raised their estimates for this quarter's GDP to 4.8%. So if we get a 4.8% print on the second quarter GDP, which we'll find out at the end of this month, at the end of June, that might change the Federal Reserve's view a little bit. Maybe they will continue to raise rates a little bit faster. But we had this little bit of a pullback here based on that commentary from the Federal Reserve that maybe they won't raise rates as fast. But if we start to see a hotter GDP, and now would at least start to show some significant growth, boy, if you've been listening to us, we've talked about this over and over and over again, that you have to have a GDP above 3% to have any sort of meaningful growth. I mean, 3% just offsets inflation. It's really kind of status quo. So you want to have a growth rate or a GDP rate above 3% to show significant growth. So a 4.8%, well, now we're getting somewhere. We'll see how that plays out. The case studies that we have talked about, look at UNP, just continues to power higher in that wave 3 that we've talked about. And remember, we highlighted these case studies using the tools within Integrated Investor, same thing in ProfitSource with the scanner tools, and I just plugged in my technical indicators using the Elliott Wave parameters and the supporting indicators that I use, and then utilizing the fact that you can run these off the healthy stocks, which I like to use because I'm not a big fundamental guy, but hey, I'm willing to admit that if you have good technicals and good fundamentals, how can that be anything but a positive? So I use, instead of running the entire marketplace off my bullish indicators or bullish technical system indicators, I like to run it on fundamentally sound stocks. And so far, if you've been watching these recordings, you know how incredibly accurate those results have been, and UNP continues to move to the upside. Our other one is Express Scripts. Look at that gap to the upside here. Putting our Elliott Wave on here. Here's our zigzag. You can see the zigzag with the ABCs in place. Now, we have talked about this over the past couple of weeks with the fact that we have been languishing in this area through here, right in the 76, 77, 78 area as far as resistance, and we mentioned that if we could get through that, then we might march up towards new highs, and that's exactly what happened. So look at these two case studies that we've had, UNP and Express Scripts. You know this from watching these videos, that we're doing this ahead of time. We are not doing back testing. We are showing you the results ahead of time, and the results have been exactly what Elliott Wave has forecast. So again, if you have not renewed your data for ProfitSource or Integrated Investor to utilize these tools, I don't know what you're waiting on. You're just throwing money out the window by not utilizing these tools. My goal is to broaden your horizons with the available Elliott Wave analysis to get past just these 1, 2, 3, 4, and 5s and realize that there's more to Elliott Wave than that, and the fact that we can utilize trading in the wave 3, we can utilize these corrective patterns, and you've seen the results. I don't have to go through and highlight them anymore. I did want to add two other potentials that showed up on the searches for this week. One is MPWR, Monolithic Power Systems, and I put on the Elliott Wave, and you can see, boy, what a beautiful wave 3. And then here is the zigzag pattern that has occurred within the wave 3. We've noted this multiple times, that these types of patterns occur within waves, the flat zigzags and triangles, patterns within patterns. Beautiful zigzag pattern there in that wave 3. We'll see how far that continues. And again, when they show the wave 4 here, that does not mean that the wave 4 is going to happen. What it's showing is that if the wave 4 happens now, if the correction occurs now, that's the expectation. But it is not telling you that the wave 4 is going to occur at this point in time. It's a common misconception with using these tools. So a beautiful 61.8% correction. Look at that, dead on it. Right there on the 1st of May, it hit it right smack on the nose. And so then if we use our extension tool, we're expecting a 100% extension, and we're right at the 161.8%. So we could get a bit of a pullback here from the resistance, or we could run up to 261.8%, which is going to take us up into the upper level of this forecast move here. So again, we'll see if we get a little bit of a correction that could occur at any time. It does not mean that this upward trend is over. In fact, our scanners, our tools, and the fundamental analysis within Integrated Investor is telling us that this stock is likely to go higher over the long term. So we'll see how that one plays out. And the other one is Texas Roadhouse, and I wanted to show you how good of a DMI this has. And DMI, as you know, is one of my confirming indicators. I say as you know because I'm assuming that you've been watching these videos over the recent time frame. We have the ADX breaking above 20, and we have good separation between the two directional indicators, and the positive directional indicator is still moving up, the negative moving down, meaning they are continuing to widen, and we have the ADX showing that strength is building. Beautiful, beautiful chart for an expected continued move higher. We're at 103% on the Wave 5 extension, and so the DMI is showing that this is a very strong trend, and a trend that's likely to continue, which means that we will likely see this Wave 5 continue up to that next fib level, which would be 161.8%. So I wanted to add a couple more in for us to keep an eye on, see how they play out, and to learn as we monitor what actually occurs based on what's forecast to occur using these amazing tools, in my opinion, the best tools in the marketplace, bar none, for you to use in your own trading and creating your own trading systems. So that pretty much sums things up for this week. I hope you've had a wonderful weekend. Happy Father's Day to all the fathers that are out there, and we look forward to talking to you again next week. Take care, everybody.